All right, so picture this, right? Factories and warehouses where all the vehicles are zipping around by themselves, moving stuff with like perfect precision.
It's a cool vision, isn't it?
Yep.
That's the kind of future that Cyngn Inc. is working towards.
Yeah, they're building the software, the brains behind autonomous vehicles, but not for like your everyday cars, right? More for industrial applications.
Exactly. Think like self-driving forklifts, tuggers, all the stuff that moves things around in factories and warehouses.
So for this deep dive, we've got a whole bunch of stuff on SYN. We've got financial reports, we've got articles, we've got some in-depth research reports.
Yeah, really interesting mix of information.
Our mission is to break all of it down so we can all figure out if Cyngn is the real deal.
Yeah, are they going to be a major player in this space, or are they, headed for a breakdown?
So let's get into it. First things first, what exactly does Cyngn do? Like, do they actually build the vehicles, or are they more on the software side?
They're definitely a software company at their core. What they do is they develop and deploy the software that makes these vehicles autonomous. Their main product is actually a kit called Drive Mod.
Drive mod, okay.
And what's cool about it is that it can be integrated into brand new vehicles, but you can also retrofit it onto existing vehicles.
Oh, so like a company could take their current fleet of forklifts and just upgrade them instead of having to like buy all new ones.
Exactly, yeah. It's a much more cost-effective way for businesses to, start experimenting with automation. They don't have to like completely overhaul everything right away.
Makes sense. Okay. So that's what they do. But how big is the market for this kind of thing? Is it a pretty niche market, or is there a lot of potential there?
Oh, there's massive potential. Like, we're talking huge. Cyngn is tapping into this like wave of growth in the smart manufacturing market.
Smart manufacturing.
Yeah, and by 2032, it's projected to be worth nearly $1 trillion.
$1 trillion. Okay, so there's definitely a big market there. So they've got the technology, they've got a potentially huge market. But what about the people behind the company? Do they actually have the right team to like steer this ship?
On paper, it looks pretty good. I mean, they've definitely got a leadership team with some impressive credentials. Like their CEO, Lior Tal, he's a seasoned tech entrepreneur. And then you've got Sean Stetson, who's the VP of engineering. He's got experience from Google and Sigrid.
Google and Sigrid, those are some big names, especially in the robotics world.
Yeah, definitely. And then recently, they brought on a new VP of sales, Marty Petritis. He's known for scaling revenue, which is like exactly what Cyngn needs right now.
Yeah, for sure. Okay, so the management team seems solid. Experience from Google, Sigrid, a track record of scaling revenue, that all sounds good. But the big question is, can they translate that experience into actual results?
Yeah, and to answer that question, we've got to dig into the numbers. That brings us to our next chapter, their financial health.
All right, let's talk financials. What's the story there? What are the numbers telling us about Cyngn's current state?
It's kind of a mixed bag. Like, they've got ambitious goals. They're in a market with huge potential. But right now, their financials aren't, like, super amazing.
Okay, so not super amazing. What are we talking about here?
Well, for example, in the first 9 months of 2024, their revenue actually declined by a lot, like 94% year over year.
94%? Wow, that's not good at all. What happened there?
Well, it seems like a big reason is that they shifted away from these high revenue contracts that were like one-time deals.
Okay.
And they moved towards a subscription-based model. So it's like they're trading those big upfront payments for smaller recurring payments, which in theory is good for long-term stability, but it hasn't really made up for the lost revenue yet.
Yeah, so it's like short-term pain for potential long-term gain. But still, declining revenue is not a good sign. Are there any other, like, red flags in their financials that we should be aware of?
Yeah, unfortunately, there are a few. Like, their gross margin is currently negative. It's actually like negative 278%.
Negative 278%. How is that even possible?
Yeah, and to add to that, their operating margin is negative too. It's like negative 22,212%.
Okay, so negative margins. What exactly does that mean for people who, aren't accountants? Why should I care about that?
It basically means that they're spending way more money to produce and sell their products than they're actually bringing in as revenue. So imagine like you're selling lemonade, but the cost of all your lemons and sugar and cups is more than what you're selling each cup for.
So you're losing money with every sale.
Exactly. And that's what Cyngn is doing right now, essentially.
Oof, that's not good. So what does that mean for their future?
It definitely raises some serious concerns about their financial stability in the short term. They're burning through their cash reserves, and they've actually needed to raise more capital recently just to keep things running. So the big question is, can they actually fund their operations and keep developing their technology without, needing to raise even more money, which could dilute the value of existing shares? It's a tricky situation.
So financially, they're not exactly in a great spot. But there's more to the story, right? We need to figure out how the market is feeling about all this. And are there any, hidden opportunities that the numbers might not be showing us? Stay tuned, because when we come back, we're going to dive into market sentiment, ownership structure, and a full risk assessment of Cyngn Inc. Plus, we'll tell you what's coming up in our next deep dive, and trust me, you won't want to miss it. Welcome back to our deep dive on Cyngn. So we've talked about their business model, we've dug into their financials, and, well, things aren't looking too great right now.
Yeah, but before we completely write them off, we got to look at some other stuff too. It's not just about the numbers.
Right. There's the whole market perception, who's actually running the show, and all the potential risks. We need to get the full picture.
Exactly. So let's move on and talk about market sentiment. Basically, what are investors thinking about Cyngn? Are they excited, or are they running for the hills?
Yeah, are they hitting the gas or slamming on the brakes?
It's honestly a bit of both. I mean, their stock price has really tanked over the past year. Right now, it's only around 18 cents a share.
18 cents. That's rough.
Yeah, it's getting dangerously close to being delisted from the NASDAQ.
Delisting, that's not a good sign.
Yeah.
So it sounds like a lot of investors aren't feeling too confident about Cyngn's future. I mean, is that just because of those financial red flags we talked about earlier?
It's definitely part of it. Seeking Alpha, which is a pretty popular platform for financial analysis, they give Cyngn a very bearish rating. And then there's stockinvest.us, another research site, and they straight up recommend selling the stock.
Ouch. Not exactly ringing endorsements. But then on the other hand, we've also seen some crazy optimistic price targets for Cyngn, right? Some analysts think the stock could hit $157 a share within the next year.
Yeah, it's wild. How do you even reconcile those two views? I think it really shows how uncertain things are with Cyngn. Some people are looking past the rough financials and betting big on their potential. They're in a high-growth industry. They've got those partnerships with companies like John Deere and Rivian, and their technology is definitely cutting edge.
So it's two completely different stories. You've got the cautious investors focused on the here and now, and then you've got the ones who are looking way ahead and betting on the long game.
Exactly. And to understand those different perspectives, we need to know who's actually calling the shots. Which brings us to ownership structure.
All right, let's pull back the curtain and see who's really in control.
So one thing that jumps out is that there's not a lot of institutional ownership. Big investment firms and hedge funds, they're not really buying up Cyngn stock.
So not a lot of love from Wall Street.
Not really. But on the flip side, there is a lot of insider ownership.
Insiders. So people who actually work at the company.
Yeah, executives, board members, employees, they own a big chunk of the shares.
Is that a good thing or a bad thing?
Well, it could mean that the people closest to the company, the ones who really know the technology and the market, believe in its potential.
Right, they're putting their money where their mouth is.
Yeah, exactly. But it can also raise some red flags about, potential conflicts of interest. Are decisions being made to benefit those insiders more than the average shareholder?
Yeah, that's a good point. Got to look at both sides. Okay, so to really understand Cyngn's prospects, we need to assess their risks.
Exactly. And that's where a SWOT analysis comes in. Strengths, weaknesses, opportunities, and threats. It's a classic way to break down a company's overall risk profile.
All right, so let's do it. What are Cygn's biggest strengths? What are they really good at?
Well, their technology is definitely a major strength. The drive mod system, it's super adaptable. They can tailor it to all kinds of different vehicles and industrial environments.
So their tech is their ace in the hole. What else is working in their favor?
Those partnerships, they're huge. Having big names like BYD, Motrec, John Deere, and Rivian on their side, it gives them a real edge. In terms of manufacturing, distribution, and just overall credibility, it makes a big difference.
Yeah, it's not like there's some tiny startup trying to do everything themselves. They've got some heavy hitters in their corner.
Definitely. But let's flip the script. What about their weaknesses? What are the biggest challenges they're up against?
Yeah, where are they falling short?
Well, we've already talked about the biggest one, their financials. Declining revenue, negative margins, burning through cash, that's not sustainable.
Yeah, they definitely need to get those financials in order. Anything else that's holding them back?
There's also the fact that they've had some issues with their internal financial reporting in the past. Like, some audits have found weaknesses, which isn't exactly reassuring.
So some internal problems to work out, too.
Uh-huh.
Okay, but they're in a massive market with huge growth potential, right? So there must be opportunities for them to turn things around.
Oh, absolutely. I mean, think back to that trillion-dollar smart manufacturing market. That's Cyng's playground. They're offering a solution that companies need to improve efficiency, productivity, and safety.
Right, the demand is there. So what can they do to really capitalize on this opportunity?
One thing is they could expand into new industries and new geographical areas. Right now, they're mostly focused on North America, but there's a whole world out there.
Yeah, go global.
Exactly. And they could also look at acquiring other companies that would complement their offerings. Maybe a company specializing in a specific type of industrial vehicle, or a company with expertise in a particular industry.
So lots of potential paths to growth. But it's not all sunshine and roses. What are the threats that CYN needs to watch out for?
I think the biggest threat, even more than the competition, is just how complex autonomous driving technology is. They're not building an app. They're dealing with vehicles that need to operate safely alongside humans.
Yeah, one little glitch could have some pretty serious consequences.
Exactly. And that means rigorous testing, strong safety protocols, and constantly improving their tech. They need to make sure their systems are super reliable, that their algorithms are always learning, and that their vehicles have all the safety features to prevent accidents.
It sounds like safety has to be their absolute top priority.
It has to be, because even one big accident could just destroy their reputation, scare away investors, and set them back years.
So the stakes are really high. What other threats are out there?
Well, we can't forget about the competition. They're up against some of the biggest players in the automation and robotics space, companies that have been around for decades and have tons of resources.
Right, so how can Cyngn compete with those giants?
Their advantage is their focus. They're laser focused on industrial applications, while other companies are trying to solve the puzzle of autonomous driving for, everyday cars. Plus, they have those strategic partnerships that give them an edge.
So it's about finding their niche and becoming the go-to solution for industrial automation.
Exactly. They need to play to their strengths and capitalize on the huge growth in smart manufacturing. If they can do that and navigate all the challenges, they could become a leader in this industry.
Okay, so we've covered a lot. Business model, financials, market sentiment, ownership, risks. Cyngn is a really interesting company with a lot of potential, but they've also got some major hurdles to overcome.
Yeah, it's a classic case of potential versus performance. And right now, it's tough to say which way it's going to go. Do they have what it takes to become a success story, or will they just be another casualty? It's a tough call.
So it really feels like Cyngn is at a make or break point. They could either totally take off or completely crash and burn.
It does, doesn't it? Like they're one of their own autonomous vehicles driving through fog, They know where they want to go, but the road is hard to see. And there are lots of obstacles.
And that's where we come in as investors. We got to try to see through the fog and figure out if it's even worth the risk.
Exactly. And to make that decision, you have to understand that Cyngn's story is part of this much bigger story, right? The story of the whole autonomous driving industry.
So it's not just about Cyngn, it's about understanding what's happening in the whole sector.
That's right. And that's actually what we're going to talk about our next deep dive. We're going to zoom out and look at the entire autonomous driving landscape.
Oh, that's cool. I'm looking forward to that one. But for now, let's finish up with Cyngn. Anything else we need to think about?
I think we've hit all the main points. We looked at their business model, their financials, how the market feels about them, who owns the company, and all the risks they're facing.
Yep, we talked about their strengths, their weaknesses. It's a pretty complex picture.
Yeah, they've got a lot going for them, like their tech and their partners, but they've also got some serious issues to address.
It's like they're both exciting and kind of scary at the same time.
They are. It's a real paradox. They're in a market with so much potential, but they're also struggling. Their vision is amazing, but they haven't really delivered on it yet. They could become a huge success, or they could just disappear. Who knows?
It's a real cliffhanger. But at the end of the day, investing is all about how much risk you're willing to take.
Right.
And whether you believe in the company.
Exactly. We've given you the information, but it's up to you to decide if Cyngn is the right investment for you. And remember, this deep dive is just for informational purposes. It's not financial advice.
Always good to remember that. If you want to learn more about autonomous driving, make sure to subscribe to the Stock Analytics AI YouTube channel. Our next deep dive on the whole industry is coming out soon.
And don't forget to check the comments for a list of other companies in the space that we think are worth looking into.
Awesome. Thanks for joining us for this deep dive on Cyngn. We hope you found it helpful. And until next time, happy investing.